Hello everybody, welcome back to another video of me analyzing a deal. This property just popped up in my feed. It's been on the market, looks like, for 7 days. It's a multi-unit. It's a 2-bed, 1-bath on each side. This is in a different county. This county is Hennepin County, and it borders the Anoka County that I primarily invest in. So yeah, let's dig right in. This is a side-by-side which meets the criteria. The price is $385,000. It's a 4-bed, 2-bath. So it's two one on each side. 2,000 square feet. Let's see, what else can I see? Built in 1976. It's got about a third of an acre. So it's got a garage for each side. Take a look at the pictures real quick. It's got a deck in each, unit, so that's cool. Let's look at the split entry. It's really nice, not too bad. Bathroom's decent. It's got a nice enclosed backyard. Got a lot of trees. Okay. So far so good. It's got gutters. It's listed as a corner lot, so that's cool. Let's look at some taxes and sales quick here. So this has been listed, so it looks like from September 2007 to July 2024. Coming up on the 20 year mark here. So it looks like they're probably trying to get rid of it for tax purposes, but 2023 taxes, 4,469. So for this is quite expensive taxes. Okay, let's get into the math of this analysis here. So we're going to take this address, and I'm going to go into my bigger pockets, my tool, rental property. I want to use the rent calculator. Load that in there. They wanted 385,000, so let's call it 25,000 closing. I will not be rehabbing this. I will do 20% down. I believe the current rate is about 7-ish. Let's call it 7.5 just to be conservative. No points, 30-year term. And then for the rental income, I'm just going to go into Rentometer. I know there's a lot of other sources that we can use, like Craigslist, Zillow, Facebook. We're going to put it, so a 2-bed, 1-bath in my other properties, you'd probably be getting about $1,550. So let's call it $1,500 and see what happens. Let's leave it 6 months. I'll check it. Yeah, so the average 1544, medians 1523, 75th percentile is 1738, and 25 percentile is 1350. So 75% of all these comps are up in this. The average is 1738. So 1,500 is pretty conservative, saying that's the least we can get. So let's plug in 1,550. Just be a medium number here. So we're gonna go back in here. 1,550. So it'll be 3,100. All right. Property taxes we said is about 4,500. Insurances, we'll just do it 1,500 annually. Repairs, we're gonna do 5%. 5%. CapEx 5%. No management fees. I self-manage all my properties. Electricity, let's see, let's just do water, sewer 200. For every month, let's do 150. No HOA, 50 for garbage. I'm assuming electricity and gas is all separate, so each unit pays for their own gas and electricity. Alright, let's analyze this. So we are currently looking at a negative $218 in cash flow. That is definitely not a deal at all. Our rental income, is $3,100. Expenses are $33.18. You need cash to close. It's going to be $102,000. The loan is going to be $308. Interest rate 7.5. Obviously, these are conservative numbers. Let's go back and adjust some numbers here. So we're going to go to edit. And let's say the interest rate, we luckily got it at 6.8. Let's take a look at that. We'll leave that 6.8. Everything else is going to be the same. Okay, so we're down to negative $72 dollars cash flow monthly, which is a huge difference. Just the interest rate alone. You could do a little better, I think. So let's go and let's say we did get the interest rate. Let's just do our rents. We are being conservative at $1,550. The average was, same thing. 75 percentile was like up in the 1700. So let's just do 1600, 1650. 1650 times 2. What is that? 3,300 times 2. 3,300. Yeah. Let's analyze that change. So a rent increase with a lower interest rate of 6.8%. And now we're in the positive. So we're at 97%, $97 in monthly cash flow. It's a 1.14% cash on cash return. Okay. Assuming all things are the same, maybe 385 is a little high. Let's go to 350,000. Because if you look at the cost per square foot, it's $193 per square foot. That's kind of expensive in the Anoka County. Maybe the Hennepin County, it's a little normal, but that's kind of still expensive. You're looking at about the $150, $160 per square foot. That's the average. So I say it's pretty high. So we could just do 350,000 with a 6.8% interest rate, 20% down, and 3,300 for monthly rents for both sides. Analyze. Okay, 279. That's getting better. We're at a 3.5% interest rate, still below what I'm looking for. My rates are 5% or higher, and I believe the 350 is still kind of overpriced. But the inventory is low, so there are not many houses, especially in Anoka County where I'm investing. There's not a lot of inventory. There was only 2 that popped up when I looked at it recently, and I already looked at those deals, and there's nothing new coming on the market. Like I said, this is the adjacent county, Hennepin County, and there were a few, so I might have to be looking into this county as well. This county and Anoka County currently do not have any rent caps or rent control, so that is what I am after as well. All right, let's play with these numbers a little bit more. All right, so let's say we're able to do 6.5. We're just kind of playing with the numbers now, and we're able to do 3,500 in rents, right? So that'd be 1,750. That'd be like the max rental in this area. So let's try that. If we were able to get the max in rent income monthly, and we got a 6.5% interest rate at the $350,000 purchase price. We'll be looking at a $505 monthly cash flow with a 6.8% cash on cash return. That is more of a wish list number, and I don't believe that's going to be happening. But there is potential, depending, obviously we don't know when rates are going to drop or go up, but so it's something. This is something I'd keep my eye on and watch out for. Definitely, kind of put it in the books and follow it. Like I said, it's only been on there 7 days, so we're gonna give it some time, um, and we'll follow it and see how it goes. But yeah, that's it, guys. That's a quick analyzing of a deal that came up. This isn't my county or my market, but it's adjacent to, and it's something that I'm kind of looking into now with a limited supply of inventory coming on. And I know we are going into the slower season. The spring sale is gone now, and people that really want to sell are pulling out, and the ones that need to sell are still kind of hanging on by a thread. So thanks, guys, for tuning in. I appreciate the support. Hit the like, subscribe, comment, and we'll catch you on the next analyzing deal. Thanks so much. Have a good night. Bye-bye.